All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Tuesday, July 16th. All right, so we had the S&P give back a little bit of gains there in the afternoon. And where did we finish? SPY finished down just 35 basis points, but it kind of felt like it was a little bit more than that. I'll explain why. The small caps finished. Sorry, they did not finish positive for the day. They finished just barely in the red for the day, and the Qs got hit a little bit harder. They were down a 0.5% today. So, in summary, well, it's coming out with a summary on the first bat here, but it did look like in some individual names that there were some decent reversal bars, right? So I'm going to talk a little bit about that. Let's talk about the S&P just for a minute. We'll talk about the S&P chart. We'll talk about the Qs and IWM, and then we'll talk about today's, where there was good performance and where there was poor performance today. But S&P kind of still holding on to the short-term moving averages. Here's my thoughts on this, right? When you have again, we're just down 35 basis points and we're still holding the short-term moving averages. But what I'm kind of looking at is basically you could say three different scenarios, and of course there's always different scenarios, but you can put a higher probability on what you think is going to happen next. Clearly we have this breakout and we've got a breakout of value. We had a small retest back here, back into the top of value. But I think, scenario number one is we continue to grind higher through earnings season. Scenario two is we chop around. And scenario three is we could actually check back to the top of value, which is 2964 in S&P futures. So what do I think could happen there? I think scenario two and three, I think is reasonable for that scenario analysis. I think either we're going to get more chop, which I think traditionally earnings season, we see a lot of chop out there. So far, we're seeing some mixed results. Today was a perfect example of this after the close. And with the bank earnings, a couple banks did okay. A couple of the banks not so great. I think the overall environment continues to be really tough for the banks. I don't really see any major reason to go into one of the banks right now. I just don't have any feeling that there is something that I'm missing by not being in the banks. They're kind of just managing within the current environment. Sure, they're going to be buying back a lot of shares after they got approved for that stress test, but is just buybacks a reason for me to really say, hey, I want to get involved? I personally want to see growth. They just seem to be, unfortunately, and I'm not trying to dwell on the banks here, but they seem to be managing in a declining revenue environment. JP Morgan came back pretty nice here at the end of the day, right? So a little bit different. A little bit different price action. Started on the lows of the day and finished higher. Goldman finished up one. So this is not bad. Goldman's revenues actually were better than expected. Trading revenues were better than expected. They dipped there intraday and then they came back. That's Goldman, and then Wells Fargo was kind of the stinker of the bunch, right? Down 3% on the day and closed right around the lows of the session. So that's the banks, but also CSX reported after the close. They, I believe, reduced future guidance, so that'll get you every time. But it's going to be a case-by-case scenario. Look at Cintas is up pretty decently. So I think, going back to my analysis here on the S&P, what we could possibly see is with the rest of earnings season, as now we're going to get into some of the tech names, is that I think sideways could be and chop for the next couple weeks possibly, unless some of the bigger tech names really start to, their numbers being much better than expected or their guidance much better than expected. But that's what I'm expecting in the chop. In the S&P is chop. I would also say that it's a possibility that we could actually come back and check back to the top of support. So if that's what you're thinking too, and I think the least probability right now is that we just continue to move higher without any checkbacks here. So again, that's you could hate me for that, but I think that's what my feeling is, and again, that's based on just what I've seen before with previous earnings periods. Second, the Bank of America Merrill Lynch Global Fund Manager, is that what they call it? Or Fund Manager Survey, maybe not global, but that came out today. What did that state? A couple things, a couple takeaways from that, and I think I have that in the room someplace. But let's see if we have that here. Yeah, here we go. So a couple takeaways was that the last fund manager survey that came out, which was in June, this is a monthly report, indicated that cash levels were really high. Well, some of those levels kind of came off, so some money was deployed into the market. What are they saying in terms of overcrowded? People like to look at their overcrowded trades. Bonds are overcrowded. I think we know that, considering what's happened. Also, tech is an overcrowded trade. That kind of makes sense, right? Number two is long. So right down in here, most crowded trades. So not overcrowded, but most crowded trades. Number one, long treasuries. Number two, long tech. Number three, long investment grade corporate bonds. That's all something that we've been seeing. I analyze ETF fund flows daily, and I could tell you that's tech. I'm a little bit surprised at because I don't think I'm seeing that much in the ETF fund flows. Like I'm not seeing a piling into tech, but I think we've known for a while that that's really where more eyeballs are at these days. More trades going up in tech than probably any other sector. Every once in a while, we see another sector kind of show up a little bit. I think especially consumer discretionary, but I really think tech is probably, I would agree with that, is probably overcrowded. So that's just a quick scenario analysis, which I think is important. Remember, you always want to be forward looking. And not always managing like what's going to happen today. You really want to kind of think out the week and think about weeks ahead. I could tell you that S&P, we did not break support for the day. That's you could write down this level or jot down this level. I think this is good support for the week. That's 3003. Right, so that's going to be the level to watch again tomorrow, maybe in the overnight session. If we move over to the Qs, that's a little bit different. The Qs are now in value. As I mentioned, the Qs were a little bit weaker. And, a similar looking picture on the daily. Still holding that short-term moving average, but, starting to lean to the downside a little bit. Notice how the 5-period is a little bit extended above the 20 as well. The 5-period exponential moving average over the 20-period moving average. I tend to take note of that too as being a little bit extended. So the Qs, we're not crazy overbought in terms of the RSI and the Qs, but doesn't mean that we can't sell off from there. Just to give you a figure for the S&P, I think that touched overbought territory. So same thing in the Qs. We're going to have a lot of names in the Qs start to report. Netflix, of course, is going to be tomorrow after the close. That should set the tone, even though that's not tech any longer. That's consumer discretionary and or communications as they've made that new sector S&P classification. But Microsoft will be a big one as well, and that's coming up. IWM, I've been talking about how this has been a must-watch area. Kind of gave a little bit of a head fake, and I want to talk a little bit about head fakes today. But IWM, it has a very slim value area for this week. Watch for a break in this. I'll tell you, I did try going long a little bit of IWM, and perhaps waiting to the end of the day might be a little bit more smart with putting on some of these trades, especially there's no break yet in IWM, but really I would watch 156.06 and 154.47. This is not determined which way it's going to break. I think a decent size move is coming, so I would definitely keep an eye on that IWM because again, look at the value area for this week. Notice how it's so much different. It's very slim. So once this breaks, it's almost to the effect of being coiled, but once this breaks, it's going to really move, right? So I am a little bit of IWM long IWM, but if this starts to break to the downside and break 154.50, I'm out of that trade. So let's start to talk a little bit about some of the groups that performed well and some of the ones that did not. We've already touched upon the major indices. Bonds, even though they were down 30 basis points for the day, they did rally back from the lows. Metals and mining were strong today. Transports were strong today. That might be a little bit weaker tomorrow with CSX reporting. The home builders were strong today. Industrials were strong today. Steel names also strong today. You can see these were the biggest increases from the open. Again, not percentage on the day, but percentage from the open. And we do have a lot of names that actually declined pretty decently. I didn't talk about oil yet, but I don't know. It seems like something's up with oil. Really, it got hit pretty hard yesterday. It tried to go higher on the 1 hour bar showing always really good levels, but it tried to go higher on the 1 hour bar and failed yesterday, and then it sold off. And then today it really got hit. Went from 59 all the way down to 57. So it took out one of these 5-minute VPOCs. You can see right here, and then reversion back, which again is often what we see with version point of controls, is it will act as a magnet. Price searches it out, takes it out, and sometimes you get a little bit of a reversion back to the mean. However, there's another one down here on the 1 hour, so I would watch 56.77. So is that showing us a leading indicator or an ominous sign? I don't know. I think too early to tell, and I apologize for my pronunciation there, but it's been a long day. So other things that did not perform well. So of course, energy. And listen, I try to talk about. Of course, everybody loves to talk about winners, and I've got plenty of those over the last couple days. But I took off Chevron. I gave Chevron a shot here. I went long. I think on Friday was it? Right at the downtrend line. It's back into value. It didn't close on the lows, but I only want to be long Chevron if it's above this line. So I kind of put on a trade right when it broke above value and above the downtrend line, but it did not do what I thought it was going to do. So I'm out of it very quick. And that's going to be the story for trades right now. If I see a lot of reversal bars on the tape, paper cuts, small losses like this are paper cuts. They're basically they small losses are not going to kill you, right? I mean, they're going to be kind of a pain in the neck like that. But if you see me put on a trade, like I put on a trade today in Match.com, I was able to hit one target. I did have a meeting of that I had to go to midday. But if you see something like this and it starts to go higher and it fails, now again, this is not lost anything here, but I don't like being in something that opens up like this, starts to get going big to the upside with nice volume, and then completely does a reversal. That's not something I want to be in. Could it come back? Sure, absolutely. And it could be up tomorrow, and this price action could be lost and forgotten. But I want to stick to being very disciplined. And if it happened to come back in here and hung out, around here, okay, that's not the end of the world. But this looks like a reversal bar to me. Again, it's not broken anything, and one day is certainly not a pattern, and that's why I'm not reading too much into today's price action. But I saw a lot of bars like this where things just look like they try to go higher. Salesforce was another one that was looking pretty good, and look at that. So again, it's checking back. It's not game over for Salesforce if this is a name on your watch list, but this is a pretty big bearish engulfing bar. So again, one day is not a pattern, but man, that's an ugly looking bar. All right, so just keep that in mind. Patterns, there's usually 3 candlesticks if you're going by those rules. Software. So software, I think, was in need of a breather. There's been earlier in the week and towards the end of last week, we've seen some really good performers. But hey, personally, and I said this on our private Twitter feed, I would love for this software to come back and retest the top of value up to 222, right into support. That's because trying to add trades up here, I think, is very difficult. Again, I want to, and in this market, right? So keep in mind, if you got caught a little bit today, there's nothing wrong with that, getting caught, because no one can pick the top. No one can predict the very top. You kind of have to be in it until it changes. And because if not, if you're going to say, oh, this is the day, what if the market goes up 5 more days? You just kind of have to wait until you see something that tells you otherwise. And then, because again, we can't control what the market is going to do. We can only control our risk, our behaviors, and how we're trading. But we certainly cannot, control what the market is going to do in any matter whatsoever. We can only react to it and control our risk. So that's what I see in IGV software, one of the strongest groups. Maybe a check back to the top of value would be a real nice place for me to put a trade on. But what else didn't do well? Again, the biotech names, they were down pretty decently on the day. Going through, talk about something that stuck out was this Roku. Momentum calls in the beginning of the day. You could see I've got the calls from this morning. These were not anything big, or large, but it just kind of shows you how momentum calls work sometimes. And that's a situation with that. Roku up over 7% today, and the rest of the group really did not do well. This is not to say that these are stocks that are in the same group as Roku, but you could see a lot of momentum just did not perform well. Again, look at the software group. The whole group sold off pretty hard today. A lot of names down over 2% today. Chinese internets, another name. So again, I certainly don't like to dwell on the negative and on losers, but look at this BZUN. Right around the 11 o'clock, 12 o'clock when I left for the day for a meeting, this thing looked like it was ramping hard to the upside, up about 4%, and it finished down on the day. So again, if you're long stock, like I am, there's not, it's disappointing to see that because I did not take a target. I'm looking for BZUN to take that next leg higher, but less painful than if I was in options in BZUN. All right, so that's that. I would say kind of a little bit of a cautious tale. I'm waiting for the put call numbers to come out. I don't think they're out yet. Let's see. Let's see if they're out yet. No, it doesn't look like it. These were yesterday's numbers for put call ratio. They almost feel like they're today's, but I think the put call ratio is pretty high, which means that people are a little bit worried with the market up here at these levels. So again, all things I think that kind of make sense, right? So we'll leave it there for the day. Other option activity. We're going to see more and more of names that are going to be reporting earnings. There's a couple trades in here for steel names. There was a little bit of Facebook calls at the end of the day. SSNC, there was a little bit of Target today, but overall, option activity wasn't anything really to jump up and down about today. All right, guys, thanks for watching the video. Have a great night. See you tomorrow.